Welcome Mr. Himanshu Mody, who is the Chief Financial Officer of the company. Good morning, Himanshu, and thanks so much for speaking to us here on CNBC TV18. First of all, I want to congratulate you. You know, you'll raise some money from the equity markets. Everyone was a little bit worried about what's going to happen from here on. But it shows that investors have confidence in you all, and that's why the stock price as well has held on. But we need to understand a couple of operational aspects. First up, it appears that the volumes were a little bit lower in Q2. So could you tell us what is the executable strategy that you'll have from here on? How much did you execute last year? What have you all done at the half-year mark? And how much will you execute for the year?
So firstly, thank you for having us this morning. And on the operational parameters, I'd like to say that we have a confirmed order book of about 1.6 gigawatts that's available with us, which we need to do over the next few quarters. In H1 this year, we've done total deliveries of about 267 megawatts, which is slightly lower than the H1 of the previous financial year at about 310 megawatts. Increasingly, of course, as the balance sheet has now become completely debt-free. In fact, there is a net cash surplus of about 600 crores on the books on the back of a success of the QIP. Our focus is to ensure that the order book that we have currently with us, we are focusing on more profitable execution and timely execution as we move along. So despite our volumes being slightly lower in this H1 as compared to the H1 in the previous financial year, our operating parameters have in fact significantly improved.
So just one more aspect, sir. Last year, I think you did 665 megawatt, right, in the full financial year?
That's right. We did 664 megawatts.
So this year it will be more than that? That means the second half of the year will be much better.
Well, again, difficult for me to give you a specific guidance on the numbers, but historically, if you look at it, H1 has been anywhere around 35% of the deliveries or performance that typically one does. And, H2 is the skewed towards the balance 60-65%. So again, difficult to give you a number specifically, but yes, we are on track to be delivering.
But Mr. Mody, right, Mr. Mody, you won't have to give us the number. If you say that the first half of this year usually does 35% of your volumes, then this year should be close to around 760 megawatts. And even if it's 40% of the volumes, then you would do about 667. So more or less, you will be above last year. At best, about a 10% jump from last year. And if not, at least last year's volumes. Can you assure the street of that?
Well, I don't want to assure the street of anything, but certainly, as I said, the order book that we have, just by that, yes, your numbers are correct. But at the same time, the delivery of orders is one aspect. As you know, there is a mix of EPC and supply orders, both that we have under our belt. And whilst we may be ready for the supplies, but even at the client's and site readiness of the grid connectivity for power evacuation, there are several other factors that go into play to ensure deliveries just beyond, which is sometimes beyond our control.
All right. If we look at the modalities of the turnaround that you've done in this business, a large part of that, of course, while improving the balance sheet, was also focusing on the sale of wind turbine generators in the Indian market, developing new WTG models as well, which are customizable for the Indian market. Just wanted to know how much of that is done and how much of an upside there is on that front as well.
So, well, I think, balance sheet optimization is done. As I said, we are completely debt-free now. In fact, about 600 crores cash surplus on the books. So far as our models are concerned, we have two models that are very active currently, which is the 2 megawatt and the 3 megawatt turbine. So the 3 megawatt turbine, our supplies have started from Q3 this. Of course, more specific, we'll report to the street when we again meet in end Jan, early Feb on the back of Q3 results. But we are now working on two active products, and the 2 megawatt has of course been a very stabilized product that's been in operation for quite a few years now. And the 3 megawatt commercial deliveries have started in Q3 as well.
Okay. O&M as a percentage of business, how much is it?
Sorry, you meant O&M as a percentage of?
Yeah, yes.
Well, as a percentage of the top line, it will be roughly about 25 to 30% of the top line comes from the O&M services for us.
Okay, and this mix is likely to, I mean, will it hold at these levels as execution moves ahead? It'll still hold there, or will the proportion change?
Well, the proportion could change based on the deliveries that we're able to do on the turbines, because the O&M business is more sort of secure inflationary linked growth. A huge discontinuity in the O&M only will come as and when the new supplies that we may get into the O&M fold. So from a percentage contribution in terms of revenue, the O&M business may keep declining from a percentage perspective on the overall pie based on the deliveries of the manufacturing sector.
But it's high return accretive for you as well. A lot on the street were also hoping for some more reorganization in the business, some more simplification, selling off non-core businesses or land. What's your prognosis here? What's likely to happen according to you? Is there any scope?
So I'll answer that question in sort of two parts. There's of course been a bunch of international subsidiaries for historical reasons that the companies had, which are been dormant for quite some time. So in the interest of simplifying the structure and better reporting standards and corporate governance, we started the activity to simplify the corporate structure. So when we come with the March 24 annual report, the street would see a much more simplified and straightforward corporate structure from Suzlon downwards. In terms of non-core assets, the company's been on records earlier that we've identified a couple of non-core assets. This was, of course, when the company had debt on its books. With the cash surplus, we will be very selective about what assets do we need to divest and at the right value. Because there is no compulsion or distress on the books any longer for divestment of those assets. So we'll be very selective about making those decisions.
Okay, and we are short on time, so I need to be very selective with my last couple of questions, sir, before we let you go. First part, the interest cost used to be close to 200 crores. Now you're seeing your net cash, you've raised some money as well. In the last quarter, I think the interest cost came down to 44 crores. So on a quarterly basis, what does that come down to going ahead? Since your net cash, does it come down to zilch? Point number one. And point number two, please clear out the air. Is Suzlon on the block?
So, okay, first on the interest cost, clearly there is, from Q3 onwards, you will see a substantial reduction in the interest cost because there is no debt on the balance sheet. Any interest cost would largely be towards non-fund based margin commissions that we have, which will be very negligible. So I think H1 this year, we have about 88 crores in net interest costs. That would see a very marked decrease as we move along in H2. And that is, of course, on the back of the debt reduction. And a very simple question to your second question, a simple answer to your second question is no.
All right.
Wonderful. Sure, right? I mean, we are here to clear out things for our viewers as well as your shareholders as well. So it's definitely not on the block.
Yeah, so definitely not.
All right, definitely not on the blocks. A lot on the street were, worried about something like this happening. It could have been a good acquisition candidate for some of the larger players as well. And now that the business has turned around, but Mr. Mody is confident of turning it around himself and also not through other owners. The company not on the block. Business prospects have looked strong. Volumes this year may at least stay the same as last year or see an increase of 10% basis his commentary. With that, we'll shift into our special segment.